my name is Lynn Slupski. I'm the Marketing Director here at Lighthouse Wealth Management, and I'm here with Colin Wally, who's a Service Advisor with us. Today we're going to talk about a really fun topic, football. Now that the 2016 season is underway for the NFL, we're going to discuss some of the commonly held superstitions that say that the outcome of various games can affect the stock market. Some investors believe that the outcome of the Super Bowl can affect stocks for the rest of the year. And then also you found some new research that shows that different sponsors for stadiums can be affected with their company stock prices based on the outcome of various games, right?
Correct.
Excellent. Well, I'm really excited. Let's talk some football.
Okay.
So Colin, what is this Super Bowl predictor that I've heard of?
Well, Lynn, this theory is called the halo effect. The Dow declines for a year once the AFC team wins the Super Bowl, and also goes up for a year when the NFC team wins the Super Bowl. This has now happened 7 years in a row, and 40 out of the 49 Super Bowls for an 82% completion rate. In 2015, when the New England Patriots won the Super Bowl, an AFC team, the Dow Jones declined 2% for the year.
Wow. Those are really high statistics. Is there scientific data to back up this theory? And do you have any info on when the last time the theory was proven incorrect?
Well, Lynn, although the indicator is an interesting take on predicting the stock market, by no means should the connection dictate an individual's investment portfolio. This model is based solely on chance and has no scientific data to back it up. For an example, in 2008, when the New York Giants won the Super Bowl, an NFC team, indicating a bull market, the stock market suffered one of the largest downturns since the Great Depression.
Understood. So you had mentioned to me earlier that there's some research that shows that companies who sponsor NFL stadiums have a correlation based on the home team's win or loss for any given game. Is that correct?
Well, Lynn, home game wins positively affect the stock returns of companies that sponsor NFL team stadiums, according to research done by Dr. Asif Eisdorfer and Dr. Elizabeth Cole. They also found that 21 home teams out of 32 stadiums are sponsored by publicly traded companies.
That's interesting. I had no idea they did this type of research. So just to be clear, you're saying that there is a direct relationship?
Yes. Whenever a home team wins, the sponsor company has associated higher returns. Let's look at a chart and I'll show you some more detailed statistics. The study is based on data from 3,400 games, 21 teams, and 26 sponsoring companies from 1997 through 2013. The research results showed that for the trading week following Monday night and playoff matches, the home team stadium sponsor earned a stock return that was on average between 1% and 5% higher or lower, depending on the outcome of the game. On the next stock market trading day following a home team win in a televised Monday night game, the team stadium sponsor earned a stock return that averages 0.50% higher than if the team had lost. After postseason games, the losing team sponsors earn a stock return that averages 0.82% lower than that of the winning team's sponsors.
Wow, those are some impressive numbers. Too bad we're not a publicly traded company. We could convince Tom and Andy to sponsor a football stadium next year. That said, let's talk about the culminating event of the NFL season, the Super Bowl. So switching gears to just looking at it economically, what are some of the advantages and disadvantages that a city can expect when they win the right to host the Super Bowl?
Well, Lynn, the Super Bowl boosts the economic activity in the area where it is held. For an example, the Super Bowl in 2013 in New Orleans generated $480 million in local spending and $35 million in tax revenue.
Those kind of revenue numbers would certainly serve as an excellent stimulus for a city. Are there even any disadvantages to hosting the Super Bowl?
Well, Lynn, historically this has hurt taxpayers. The average NFL stadium costs about $250 million in public funding. The 2015 Super Bowl in Glendale, Arizona cost Phoenix taxpayers around $2 million last year.
Thanks for that overview, Colin. That's really interesting. I think everyone has a little bit of interest in the NFL at least, and it's really cool to see how it could potentially affect the stock market. Thanks for your time, and as always, if you have any other questions for us, don't hesitate to call.